The Bureau of Economic Analysis just released a huge revision to the past 3 years of economic data, and it is ugly. In short, it's exactly what you'd expect. Higher inflation, weaker growth, lower consumer spending, and a bigger share of GDP faked by government spending. Now, in theory, government statistics are periodically revised for noise, a cold winter, a holiday falling on a Sunday. In reality, however, the adjustments have become so lopsided that either government statisticians have gotten very bad at their job or the original numbers are lies. After all, the media reports the original statistics breathlessly, and of course, they ignore the revisions 3 years later, especially if those revisions are clustered dozens at a time and then pumped out late week, which is exactly what happened here. Now, the BEA knew their data was wrong. I mentioned in a video the epic divergence between two standard tallies of the economy, the famous GDP and the GDI. In theory, they are the same, what's bought versus what's sold. In fact, as recently as 2021, they did match with just a 0.02% divergence. Since then, things went weird. GDI remained flat. In fact, it fell, adjusting for population, while GDP allegedly jumped almost 2%. Now, historically, GDP tends to catch down to GDI. And in fact, it was worse because they revised both consumer spending and inflation, meaning we are poorer than we thought, and they're confessing they undercounted prices. In raw numbers, BEA revised consumer spending down for 5 of the 6 past quarters. The revision for the latest quarter was striking, going from 1.7% to 0.8%, which is a 9 sigma miss. It would occur by chance with roughly 1 in 1 quintillion odds. So that's about 4 billion times more likely than you winning the Powerball. Beyond their astronomy scale miss, they also reported that government consumption has actually grown faster than personal consumption for the past year, meaning the government Borg is taking over the economy. That progressively makes GDP more a measure of government waste than national prosperity. Meanwhile, the BEA's inflation revisions hiked prices in 7 out of 10 of Biden's quarters and revised just 1 down. That's a pretty impressive miss ratio for professional statisticians. It's about 4 to 1. And it took peak inflation up another notch. They revised savings numbers, which knocked off about 1.1 trillion we thought we had. And finally, the BEA revised GDP itself, going way back to 2020. And turns out that long after the fact and long after the election, the BEA now says that Trump's growth was stronger than they said, and Biden's growth was weaker, again with a 4 to 1 ratio in favor of Biden. So that means the contraction last year was actually down 2%, which is a quarter worse than thought. So what is next? Brought to you by Unchained. What's next is the economy's a lot weaker than they say, but there's a lot more to revise. At some point, our government statistics start to look like China, where the numbers are taken as propaganda and people rely on shadow indicators like grocery bills or tossed resumes. Reality, alas, does not care what spins paid government statisticians are selling this week. Okay, we'll be watching. See you next time.